We're going to go ahead and get started this morning. Before we begin looking at charts, I just want to go over the upcoming events. We will be having a volume analysis webinar. It meets 6 times, and it meets 2 p.m. to 4 p.m. October 1st, 4th, 8th, 11th, 15th, and 18th. This is a 2-hour session that is held twice a week for 3 weeks. And that will begin October 1st, but you have 2 weeks to sign up for that course so that I can get the materials out to everyone. Then we have the advanced seminar, which is November 4th through the 8th. That will be held in Greensboro, North Carolina. It is an advanced seminar, and that means that you must have been to a Master of the Trade seminar prior to attending the advanced seminar, and there's no exceptions to that rule. And I also scheduled another Master of the Trade seminar because the Las Vegas seminar sold out so quickly. And that is held December 3rd through the 5th, and it also will be in Greensboro, North Carolina. Okay, if you have not picked up the latest Stocks and Commodities magazines, I do suggest that you pick it up. There is an excellent article in there that I wrote on volume and divergence. And regardless of whether you use my tools or not, that article is actually exceptional. Okay. Yes, you can, Bob. Not a problem, hon. Okay, as you can see over here on the left, I do have a radar screen. All I'm doing is monitoring the volume because we should have a rollover on the euro this week. So all I'm doing is monitoring the volume on that to see which contract I should actually be looking at. Okay, now what I want to do is start with the bar range because the bar range gives me critical information as a trader. And what this does is it measures the daily range and a long-term range. Now I use a 254 period as my long-term range because that equates to 1 year of trading. Good morning, Gwen. And what this does for me is it allows me to monitor how much the market moves, and then I can actually determine my profits and my stops based on the long-term range. So at any given moment, I can put anything into this radar screen and actually determine what my profit target and what my stop target should be. So for example, if I was new to gold and I wanted to trade gold, then I would just look at the symbol GC and I would know that my typical stop would be 15 ticks and my typical profit target would be 30 ticks. If I wanted to trade the NASDAQ, all I would have to do is look for the NASDAQ symbol, and my typical stop would be 9 ticks and my profit target would be 18 ticks. So when you hear me in the room refer to my stop or my profit target, it is coming from this radar screen. Does everybody understand that? So when I say, okay, it has to be a low risk entry on the euro, that means that the stop should be less than 7 ticks. Okay? Okay, now we're going to go over to the radar screen that I use. And this has the euro, gold, the NASDAQ, the Swiss franc, the Aussie, the Japanese yen. It has the ES, which I do not trade. There's just not enough market movement for me to trade the ES, and also the Dow. Also has a 3-minute, 12-minute, 45-minute, 180-minute. a 720, a 1440, and a weekly, all within this one radar screen. So I trade multiple time frames in my trading, and this allows me to know what is going on all of these different time frames, because that could affect a trade on a 3-minute chart. Now I'm going to walk through these columns very slowly. I'm not in a rush to try to get into a trade this morning. I think it's going to be very slow, but we'll see what the market does. The first column here is one of our indicators. It's called the THD pullback slow moving average divergence indicator. And what this does is if I get a divergence, it will plot divergence, whether it's long or short, in this first column. The next column tells me exactly how many ticks away I am from the slow moving average. For those that do not know, the slow moving average is just an 80-period moving average. Okay? If it is a negative number, then I know that it is above the slow moving average. If it is a positive number, it is below the slow moving average. The next column will give me a numerical value telling me how large the divergence was. In other words, in this, the lower number is better. I know right now that this 99.96 is not going to be a good divergence, because the closer it gets to 100, the worse the divergence is. Whereas this one over here that is 18.54 would be a better divergence. Okay, so when you're dealing with divergence, you're looking for the lower numbers. Does everybody understand that? Okay. Also, the short divergence is just telling me how strong is that short divergence. We then have the THD pullback to the ATR divergence, and this is simply telling me if there is a divergence as it is pulling back to the ATR that is built into the THD trend indicator. So right now I know on the Euro weekly chart we have had a short divergence. I also know that we are 742 ticks away from the ATR on the weekly chart. So all of that information is gathered within this one indicator. The next column is the THD ADX 5.0 indicator. In this indicator, it gives me the ADX value, it gives me the DMI value and the color. It also tells me if I have made a ADX peak. It tells me where the line in the sand is. Now the line in the sand is where we are predicting the ADX peak to come in. Does everybody understand that? So right now I can tell you on the 12-minute Euro chart we are 10 ticks away from the line in the sand. So I'm 10 ticks away from potentially making a magenta peak. Okay? We then have the THD volume divergence. We mainly use this one when we have a value that is what we considered overbought or oversold. That means that the ADX is above 70 and we start getting divergence. In this case, there is a short divergence saying that we may have a potential magenta peak on the Aussie 45-minute chart. Does everybody understand that concept? So at a glance, I can actually sit here and go through my radar screen and say, okay, where's my potentials here? Okay, what I would be looking at would be the Japanese yen, because you have a value of 83. So I know that we will more than likely get a magenta peak on the 45-minute. Now, I would have to go and look at that chart to see if we get the trade in, and then look to see how far is price from the ATR, because that gives me my profit potential. But as far as markets to look at, it would be right now, as I'm seeing it, the Japanese yen 45-minute chart, potential on the Aussie dollar 45-minute chart, and really I'm identifying it by the high values on the ADX. Okay? If you go down to the Swiss franc, you can see there's none of them that are above 70. On the NASDAQ, there's no correlations. You have blues and you have reds and then you have blues again. On the gold chart, the only position I could potentially take would be a long position. But I do need to make sure that I am aware that the daily chart is at 75. No, Bonnie. You can trade the lower time frames, but the issue is with an ATR, especially the ATR that is built into the THD trend, as price moves up, the ATR is moving up. As price moves down, the ATR is moving down. So if you're taking a magenta peak and trying to counter trend trade it from a lower time frame, you have what we call time decay. And that means the more bars that progress, the smaller your profit target is actually getting, okay? And you'll see that when we start looking at charts, I'll point it out to you. Sure, Artemin. The line in the sand, okay, is saying, okay, and let's put price in here for a moment. Let's see. I think it's called last. There we go. And let's move it up a minute. Okay, so right now the euro is at 28.37, okay? The line in the sand is at 28.26. So on your 12-minute chart, you are exactly 13 ticks away from potentially making a magenta peak. Do you understand that better now, Artemin? Now, on the weekly, if you notice, you're 0. So that tells me you're right at the point of making a magenta peak on the weekly. Right. It would be a magenta peak on the 12-minute because this is where the line in the sand is. No problem, Artemin. So this kind of gives me an overall picture of what the markets are doing. Okay. And then I also have, and I think we identified potentially the Aussie. So I'm going to click on the Aussie. And this is going to change all of the charts on this one workspace. Okay, this is the Aussie. And you can see that right now as it stands, you have an ADX that is above 70. This is where we're expecting a potential magenta peak. Is it there yet? No. Are you having divergence? Yes, you are. Okay, so this is not one I would want to be going long on. And typically I don't trade the Aussie on a 3-minute chart because it doesn't have enough movement like the euro does. But it's a great example of, I know to anticipate right now a potential downtrend because price should retrace back to the ATR, which is this plus sign on the chart. Price is currently at 1.0326 and the ATR is at 0270 on the Aussie. So your profit potential is from 0326 down to 0270. Does everybody understand that concept? Knowing this, I can go back to the bar range indicator and I can look for my Aussie. And it is right here. And I know I should be risking no more than 6 ticks on the Aussie. My first profit target would be 12 ticks. So does everybody understand how the two work together? Actually, the 3 workspaces. Now, we're going to go over real quickly the indicators on the chart. And I'm just going to enlarge the 3-minute for a moment so we can go through it. The price bars are colored either blue or red. Then you also see a plus sign that is either blue or red as well. Okay? The plus sign is what I am referring to as the ATR. It stands for Average True Range, and it was developed by Wells Wilder back in the early 70s, I believe. Now, the price bars turn blue or they turn red based on this slow moving average and another moving average that I have built in to the moving average trend. So in other words, if the price bars are blue, I know that price has to be above the slow moving average. If it turns dark, I know that it has actually gone below the fast moving average, but it is still above the slow moving average. Anytime price comes below the slow moving average and the fast is below the slow moving average, you will see the price bars turn red. Let's see if I can find a spot. Okay. As you can see, the market gap down over here, and you can see that the price bars turned red. Seeing that red, I knew two things. The fast moving average was below the slow moving average, and price was closing beneath the fast moving average. If it was closing above the fast moving average, it would be dark red, like it was over in here. Okay? Then we have the ATR stop. The ATR stop is this plus sign, and it is built into the THD trend indicator. It is either below price or it will be above price. If it is above price, it will be red. If it is below the price, it will be blue. We then have the trend SR, and let me enlarge that for a moment because it's actually one of my favorite indicators. And I want to enlarge it so you can actually see what it does. So now you see that there is a magenta dot here, and then on this one there is a yellow dot. What that tells me is every time it makes a magenta dot, then it is higher than the previous stored high that we have. But when this yellow dot appeared, I knew that the high, it was a high when compared to 3 previous bars, but it was not higher than the previous high that we had stored. Whereas this one actually was higher than this one. So just with color, I can identify whether we are potentially in congestion or whether we are making new highs and new lows. Does everybody understand that? I know sometimes it's kind of hard to get your head around that concept, but it's just an easy indication with color as to whether we're making higher highs or lower lows. Now, the next indicator, let me take this back so you don't have to see these big dots all morning. Okay, the next indicator that I have on my screen is the THD free volume indicator. Now, right now, this free volume indicator is only available for TradeStation and multi-charts. We thought we had it for NinjaTrader, but there was an error in it and it wouldn't plot. So we are working on that. But basically, if you have a blue volume bar, and this is actually a cyan, it tells me that price has made a high when compared to the previous bar. If I see a red volume bar, then that tells me that price has made a low when compared to the previous bar. When I see a gray bar, and this can be any color because it's inputs in the indicator, you can change it to white or yellow, whatever you want. When I see the gray volume bar, that tells me that price is an outside bar. That means it made both a high and a low at the same time. Then you see that I have gaps in my volume. I did that on purpose. The reason is when we have an inside bar, that indicates a pause in the market. When we have a pause in the market, that's not telling me anything in volume. This is the Aussie, Mike. It's the Aussie currency future. So when I have an inside bar, it's not giving me any additional information as I'm reading my volume. I consider it noise, so therefore I just totally ignore it. All of the currency futures would be based on the US dollar, Mike. And this is a currency future. So it is very much like the Aussie US dollar. If you pulled up the Aussie US dollar, you would see the same price movements. You're welcome. Now, directly beneath that, I have the THD RSI indicator. Now, this is telling me whether momentum is to the upside or momentum is to the downside. Anytime I see dark here, I know that the ATR, which is the plus sign, is now above price. Okay, I would be anticipating it to be below price because the market's going up. But in this case, the ATR flipped and it is now above the price instead of being below. So it's incorporated into the RSI. And these will give you really nice entries into existing trends. Okay. We then have the THD ADX, and that by far is my favorite indicator. It tells us when we have a strong trend. It also tells us when the market is not trending. It, again, is very color coordinated. Anytime you have an ADX that is below this yellow line, which is at 30, the bars and the line will be a dark color. Okay? Anytime the ADX line is above 30, then you will start seeing bright colors. If it gets above 50, it will turn to a magenta color. Anytime it is above 70, that tells us we should be expecting a pullback or retracement. Okay? Now, if the line is above 30 and decreasing, you will then have a dark colored bar. In this case, it was dark blue. Now, blue is for an uptrend, red is for a downtrend. The ADX is a non-directional indicator. So if you are in a strong downtrend, you want to see this line going upwards. Okay? Does anybody have any questions so far on the charts? That is correct, Artemin. The ADX colors, sure, Bonnie. Anytime the ADX line is below 30, which is an input in the indicator, you will have dark blue. Anytime the ADX is rising and it is above 30, then you will have a bright color. Anytime the ADX gets above 50, then you will have magenta, okay? If at any time the ADX starts to decrease, you will have dark colors. Unless it is above 50, it will continue to be magenta. Anytime it goes above 70, you are expecting a retracement. There's somebody in the room that is recording, Christian, and I could probably make it available. Okay? Now, again, blue is for an uptrend, red is for a downtrend. And that's throughout the color scheme on the THD. Any other questions about the indicators so far? There's a lot of information built into the indicators, Christian. And the one thing that I always tell clients to do, all of these colors are actually defined within the documentation. At the seminars, I actually make cards for you to study. They're like little study cards, like you're back in college or something. But we give them out with the trades that go with that particular indicator. And that is because anytime you see blue in any of our indicators, it's telling you higher highs, typically. And anytime you see red, it's really telling you downtrend, which is lower lows, okay? And that's throughout our color scheme on anything that we're doing. And usually the magenta, we use the magenta in both the ADX and the Trend SR. And when you see magenta, it means, hey, you need to start paying attention. And magenta really stands out at you. That's the reason we chose that color. Any other questions on the chart so far? Now, one of the things that we noticed was when people first started with THD, you know, trying to trade and pick up all of the information on the different time frames was a little bit hard to do. So what we did was we came up with what we call as a trade entry indicator. And this is letting you know what is going on the higher time frames. So in this case, this is called my beginner's workspace, and this is where I suggest that you start, because this is where you're going to start noticing the different patterns that occur on the higher time frames. So we have an easy money indicator, which is a very, very low risk indicator. And what that does is it plots an ATR channel below or above the price, okay? The yellow line would be your entry. Then you have your ATR, and then you have the red line. The yellow line is your entry. Then the red line is your stop, okay? If price touches the yellow line, you will get a yellow dot. And if you get the yellow dot, you will also get a red dot, because anytime you're in the market, you need a stop. This is your stop. It also plots a green dot. This is your profit target. It is based on a 1-to-2 risk to reward ratio. So if I am going to be risking, let's say 10 ticks, because the R up here tells me it's 10 ticks, then I know my profit target would be 20 ticks. We do add slippage into this because in a real life trading environment, you will have slippage. So in this case, you can see that you've had a magenta peak here on gold, and I'll mark that for you. The magenta peak actually came in here. So you had a magenta peak. We're expecting it to retrace to within 5 ticks of the ATR. It retraces, touches the yellow line. On this retracement, the one thing I would be looking for is a divergence in volume on the seller's side. So this was a low, this was a lower low. Do you see the divergence there? So in this case, your entry was at 1736.8. Your stop was at 1737.7, which is about 11 ticks of risk. And your profit target was 1739.2. Okay? And as you can see, you did get your profit target here. Now this is one that when it touched the yellow line, then you could enter. You could actually have a limit order, or you could have just entered at market on that order, okay? But that is because the divergence had already formed. Yeah, it was at 933, and would I have entered it, Gwen? No, but it's an excellent example of the tools. What did you want me to repeat, Christian? About the limit orders or the market orders? Okay, what you're doing, remember the volume. If you make a low, you will have a red volume bar. So you made a low, and this was lower than this low. So you had volume divergence. In other words, the volume was decreasing as it was making lows. Do you understand? And the volume divergence article that's in Stocks and Commodities this month explains all of this about the volume divergence and low risk entry points. Okay? So you knew as it's coming back to the ATR that sellers were decreasing. Okay? So you could have had a limit order right at the yellow line, and then you could have put in your profit target in your stop. Okay? Now, the next indicator, of course, is the ADX, which I have already explained. Now we get into multiple time frames. Okay? The first trade entry, which is this one right here, is from the 12-minute. It does use the color scheme of the ADX because it is the ADX value of the 12-minute chart. So the dark blue tells me that the ADX on the 12-minute chart is decreasing. The bright blue tells me that the ADX on the 12-minute is actually increasing. Okay? The one directly beneath that is the ADX from the 45-minute chart. So at the time that we made this magenta peak, I know that number one, the 12-minute is increasing and it is above 30, telling me that the market is trending. Then I look down to the 45-minute chart and I see not only is it bright blue, but it's also magenta. That tells me this is a strong uptrend on the 45-minute chart. I know that it is not above 70 because I have no yellow dot on right up above here. The yellow dot would tell me that we are above 70. We're not, so I have no yellow dot. Does everybody understand that? This is a great way to start reading multiple time frames. Now, look over at the NASDAQ. Look at the difference. You have a 3-minute ADX that is bright blue. You're bright blue on the 12. The 45-minute is not trending yet. Do you see how this has been flipping between blues and reds? There's no consistency. That is absolutely correct, Bonnie. It is showing on gold, it is showing that you are above 30 on the 12, and now you're actually above 50 on both the 12 and the 45, but you're not above 70. Let's go back and see if we see right here. Do y'all see the yellow dots? And I can probably make those bigger for you for a moment. There we go. Do you see these yellow dots? They are telling you that on the 12-minute you are above 70. Now this one, because you're above 70 here, if this had come back and touched this yellow line at any time, you would know do not take that trade because you have made a magenta peak on a higher time frame and you are expecting price to pull back within 5 ticks of the ATR on that time frame. So, and this is a great example here. You see that you're coming back to the ATR on the 3-minute, but you have a yellow dot here. That's telling you don't take that trade, because if you do get a magenta peak, which actually occurred on the next bar, you will be stopped out on your 3-minute chart. Does everybody understand that? Because it is very critical to understand that on this workspace. So what I would be looking for right now is just across these time frames, the only potential would be on the euro right now. You've made a magenta peak. You're expecting it to pull back to the ATR. You are not above 70 because I have no yellow dots. And the 45-minute is in an uptrend. Audrey, what did you not understand? This is a good day for me to explain the tools because the market's pretty slow today. What do you want me to go over, Audrey? The yellow dot? Yes, everything you see on this workspace comes in the beginner's package. The yellow dots tell me that the ADX on that time frame is above 70. That is where we are expecting a magenta peak to come in. If a magenta peak, and this is on the NASDAQ, so let's go over to the NASDAQ at 3:30 this morning. And it helps if I do this visually for y'all. Okay, let me get this lined up. Okay. This is your magenta peak. Okay, Audrey? That magenta peak tells me that price should retrace to within 5 ticks of the ATR. This is where you're going to see time decay as well. Okay? Now, over here, if you notice, you're touching this ATR. That's the plus sign. All right, the yellow dot is plotted because this is above 70. This is normally a turning point, a place for retracement, a pullback, whatever way you want to describe it, okay? So knowing that I had a yellow dot, knowing that I may retrace down to 27.85, I would not be able to take the easy money entry here at 2791.3. Because if I take this knowing that I am above 70 and I'm expecting a retracement over here, I will be stopped out on the 3-minute chart. Does that clarify it, Audrey? Now, I told you about time decay earlier. Do you see how as you're making this magenta peak, the ATR is down here at 27.85? Now, after that, you get 1, 2, 3, 4 bars. By the end of the 5th bar, the ATR has pulled up to 27.87. Yeah. That is called time decay. That is what happens with each progressive bar the ATR pulls up until it levels off. Does everybody now understand time decay? That's the reason I do not trade the magenta peaks on a 3-minute chart, because although it may start out down here, it then moves up, which eats away at your profit targets. If you're trading this higher time frame like the 45-minute, then normally it's okay as long as the market is moving. You won't have as much time decay because you have a bigger profit potential there. Russell, was there something that you did not understand? Okay. Now, what is the difference between the packages? Okay. Well, thank you, Bob. The beginner level comes with everything you see on this chart. It comes with the easy money, which has the built-in THD trend and ATR. Of course, the volume is free. It comes with the ADX and with the trade entries. Okay, that's a great place to get started. Everything else I have shown this morning is included in the gold package. The silver package actually includes the e-course, which has a lot of videos, quite a few hours of videos in that one, as well as quizzes in the book that I wrote on mastering your trade using trend technology. And the platinum package actually comes with everything that I have shown this morning, plus the e-course, plus the videos, plus a 3-day live trading seminar. So really, where do you fit in really depends on your experience. It depends on whether you want to go to a live seminar or not. Okay? Today is a great day to go through these indicators. This is one right now over here on the euro that I would wait until the close of this bar before I entered that. Now that would skew my risk to reward, and this would be one that I would use the clipper on and not go with the green dot, the yellow dot, and the red dot. Why? Because this was not enough divergence to give me my entry. This bar as it stands right now does have the divergence on it. How many trades can you expect in a week on average? Depends on the markets that you're trading, Stefan. It also depends on how the market is moving. I'm going to insert the clipper on this one. Here we go. And false. Actually, I'm going to set this to true. Okay, now I am going to set that to false, I think. Okay. Let's see. What market do you trade, Stefan? It's divergence on the low squint. I mean, if you trade something like, let's say one of our slow markets, mostly Russell in the ES. If you're using it on a 3-minute, you're probably at 6 to 8 trades a week minimum. I don't recommend it for the ES unless you're trading about 100 contracts, because I don't recommend that you trade the ES. I would definitely change from the ES, Stefan. You know, there's so many markets that are better than the ES to trade. It's unbelievable. You know, the euro is going to give you more money. Gold is going to give you more money. Crude is going to give you a lot more money. The EMD, God, no. The EMD is terrible. Why would anybody trade it? It has no liquidity in it. I mean, there's no purpose for me to try to trade the EMD. Yeah, for those of you that, it seems like I've got some of you in here that don't know the way markets move when compared to other markets. I would suggest the NASDAQ is better for a beginner because it's only 5 ticks. Okay. And it allows you to trade multiple contracts. if you go to our website and go to our blog, I've written some really, really interesting articles that were published in Stocks and Commodities, where I look at the Russell, I look at the ES, I look at the currency futures, I look at all of the different commodities. Which ones are better for you to trade, and when can you trade them? That's the other important question. Because, for example, you may want to trade during Asia because you've got a day job. Okay, what markets can you adequately trade during Asia that will have the volume and the volatility to give you profits? They're identified in these articles. Why do I not like to trade the ES? Because when you're comparing dollar for dollar, the ES is the worst market to trade. But if you're trading 50, 100, 200 contracts, you have to trade the ES because the other markets will not handle that kind of volume. These are things as a trader that y'all need to be looking at. It's not just, well, what does he trade? It gets a little bit more complex. And I did all of the research, and it's all printed in these articles. And I think you can actually buy these online. They're at $4 from Stocks and Commodities. It's worth every penny of that because you will not be in the dark any longer. How many of you just trade maybe 1 or 2 contracts? Well, thank you, Jay. Okay, if you're trading 1 or 2 contracts, why not go into the NASDAQ and trade it with 3 or 4 contracts? What's the difference? The runners. You are allowed to be able to go for Clipper 3. You're able to go for, until the ATR flips. Okay, that's the runners. But instead, you're focused on tick amounts like 1250 a tick. Well, 1250 a tick, I can only do 2 contracts. But 1250 a tick on 2 contracts is $25. That means $25, I could trade 5 of the NASDAQ and get more runners in. Does everybody understand that? The runners increase your risk to reward. When you're trading 2 contracts, okay, the NASDAQ is actually a 24-hour market, pretty much most of the time, Christian. Although you'd probably be better off, I believe, it's trading the Dow during Asia. The difference is if you're trading 2 contracts, okay, you can take Clipper 1, Clipper 2. The most you can do on risk to reward is 1 to 3, okay? But if you're trading 3 contracts, you can actually increase it 1 to 4. If you're doing 5 contracts, you could actually increase it to another Clipper level and do a 1 to 5. In Asia, I would probably recommend the Dow during Asia because it's got more liquidity. But if the market is moving during Asia, the NASDAQ will move as well. Okay, I'm going to go grab some water and I'll be right back. I would not be surprised if we get stopped out over here on the euro because I do know that the 12-minute is right at the 70 line. But without the gold package, a minimum of the gold, you would not know that unless you had another chart up. Okay? So I'm going to go grab me some water and I'll let y'all watch this one. Notice that the red dot has moved up and is at 28.25. I would move my stop up to 28.25 following the red dot. Okay? A flip of the ATRJ is when the plus sign goes from blue to red. And all it is when price closes below the ATR, it will then flip to the other side. Now, do you see how you got the dark blue on the 12-minute? What does that tell you? Magenta peak. That is correct. And that means, again, you will probably be stopped out on this trade. We knew that ahead of time because we knew that the ADX was at 69 on the 12-minute chart. Oh no, the volatility on the futures is different from the volatility of the spot. Spot is unlimited, okay? If you go in with 200 contracts on the spot side, you will be filled, Artemin. If I was to go in with 200 contracts over here, I'm going to get slippage on some of those contracts. Well, I have mine set to an automatic 8 ticks, Nick. Now, we did upload a video, and let me go back to the THD website. We have a community for all of the THD users, and you are only allowed to join this community if you are a THD member. So if you log in, and then we have a lot of groups over here. We have the TradeStation user group. We also have multi-charts user group. Under multi-charts, if you're a multi-charts user, we have several videos under the discussions. For example, using the Clipper and multi-charts, creating the beginner's workspace, creating a chart template, creating a market scanner. All of those are accessible to our clients. If you're a TradeStation user, we actually, under discussions, we also have the TradeStation radar screen and TradeStation basics. Now, we will be adding to these, okay? So, that's one of the reasons we have created the THD community. Yeah, we just added those about a week ago, Nick. And that's one of the things that kind of sets us apart from everybody else is we do try to give traders the tools and the skills that they need. Is a flip of the ATR an automatic get out? Yes. In most circumstances, Stuart, yes it is. You see, in this case, you were stopped out at 28.24 just by having the full package. You wouldn't have taken that trade because we knew it was at 69. That's the difference. No, you can put it on any time frame, Troy. It doesn't matter what it is. I could set this to a daily, and I could have the trade entry set to a weekly and a monthly if I wanted to. You would have to add the 3 data streams. So the setup would be a little bit different. Yeah, but we know typically when it's going to do it, Bonnie. In other words, in this one, we knew that the ADX on the 12-minute was at 69. You could have picked that up in the radar screen, or you could have picked it up by looking at a 12-minute chart. Okay? So this was an area, to me, this was prime for a retracement. Now, if it retraces, it should retrace to within 5 ticks of the ATR on the 12-minute chart. So yeah, you would get stopped out on this because of the magenta dot. And I know that there was a magenta dot. Remember I said, do you see we just turned dark blue? That's the magenta dot. Does everybody understand that? Now, we're saying magenta dot. You do want to make sure that it is a magenta peak. And that means it looks like an upside down V. Peak means a pointed top. It does not mean flat. You've got the same scenario over here on gold right now. Do you see that you've got the dark blue here? Okay, that's a potential magenta peak on the 12-minute chart, which means if you enter this, you may well be stopped out. So now if I go over to the gold workspace, there's your magenta peak. Is it starting to make sense to you now? You would only get one magenta dot. And this is where, okay, if you do not understand these color schemes and you're trying to go in, let me turn that off a minute. If you're trying to go in as it's hitting this ATR, well, the 12-minute is actually telling you it's probably going to come back to here as it stands right now. Does everybody in the room understand that? This is why the ADX is one of my favorite indicators. That is absolutely correct, Bonnie. Once you start seeing the magenta with dark blue on top, don't even think about it. I would absolutely ignore the easy money trade on gold. And let me go back. This one, no way I would touch that. Knowing right here that I just had a magenta peak. I'm just drawing the red lines, Stuart. It's not an easy money loser because I know not to be in it. It's only a loser if I don't know not to be in it. Yeah, if you got in. But if you knew the color scheme, you never would have been in that trade. Because it goes against the rules. No, it didn't. It came on the very same bar, Christian. Thank you, Bonnie. You could not have entered until the close of this bar, Christian. And you can see you already had dark blue. I have mine set up where it's actually reading the data from the 12-minute. My trade station went offline. Did anybody else's trade station go offline, or is it just mine? Christian, I'm going to send you my cell phone number. That's the best number to reach me on. I sent it to you privately, Christian. Okay, it's back on now. Yeah, sometimes it kind of fluctuates. Someone's asking me, do I suggest TradeStation on multi-charts for multiple time frames? To me, multi-charts, it's more economical. Yeah, multi-charts is what Bob said too. Yeah, for some reason the data has been sporadic. No, the invalid tells me that price is not making higher highs and higher lows or lower lows and lower highs. So it's an invalid trading time period. You're not allowed to take any trades. What can you do with the hand tool, Bob? Oh, okay. It's in multi-charts now. I noticed it was there. I didn't know it wasn't there before, though. Now, one of the reasons that I took the time to really thoroughly explain the tools today is I already figured that the market was going to be slow because we've got major announcement on the euro tomorrow, and then we have Fed announcement the next day. And these are going to be high volatility reports. The markets have all but kind of dried up and died this week compared to what they normally are, I should add. It's one of the congestion alerts. You're so cute, Bob. Ace ate all the bones, Bob. So, like, how slow can you go? Okay, can you explain how you look for a magenta peak on the 45-minute? If there is enough room to the ATR, then look for an entry on the 3-minute, I think. What entry criteria do you look for on the 3-minute? Let's see. Let's go over to gold. Let's see if I can find it. Well, this is probably going to be the closest I get. All right. Number one, when you get the magenta peak, what you have to do is measure, okay, price right now is at 1693.4. And I'm going to have to make these exact. So, all right. That's when the magenta peak comes in. You know that it's going to go up. Now, at that time, you have the ATR is at 1700.70. So, roughly, that's about 7 points. Okay? There's 10 ticks in a point, so that's roughly 70 ticks there. Are you with me so far, Richard? 70 ticks on gold, my first profit target would be 30 ticks. So I know that I could potentially at least get a Clipper 1 out of this trade. So now I come over to the 3-minute, okay? Do you see how it flipped the ATR? Let me go back. And I've got to line these up. This was the close of this bar. And I've got to make sure they're lined up. Let me do it over here. Okay, so you flip the ATR over here on the 3-minute. Now, in order for price to go up, it has to flip the ATR, but it has to come back and it has to form an area of support for price to bounce up. Okay? So in this case, price has flipped the ATR and then it comes back to test the ATR. Do you see that right here? What I'm looking for is diverging volume as it's coming back to test this ATR. Okay? You have diverging volume, so your entry point could be at the close of this bar. It could be at the close of this bar, depending on your trading plan. And there's your Clipper 1. Do you understand that now, Richard? That's how I would counter trend trade that. You're almost getting it right now on the 3-minute. Okay, but you do not have that magenta peak over here. You have to have the magenta peak before you do this move. That's one of the advanced trade setups that I actually teach at the advanced seminar. No, it's only one magenta peak. We work off of one magenta peak at a time. Now, in the room, I basically use the 45, the 12, and the 3 because we basically have 2 hours in the room, okay? But I want you to expand your mind and think about doing this on a weekly chart, on a daily chart, on a 720 chart. How much room do you have between where price is in the ATR on a 720 minute or on a 180 minute chart? Okay. No, Artemin. Clipper 1 is based on your risk. Okay? And I know the the stop on gold is 15 ticks, and that makes my profit target 30 ticks. Because I'm using, okay, the most I'm going to risk is 15 ticks. That's what I have to base it off of. On the monthly euro, let's see if I've got it. Well, let me change this. Over here, Nick, from the closing point of this bar, okay, to the ATR, there was a lot of ticks. Oh, you were on the euro. I'm sorry. I'll change it real quick. Okay. So you've made your magenta peak, okay? 26.11 back to 35.99. Now think about that, okay? Because what has the euro been doing? The euro's been going up. And they all work together, Christian. There's not a definitive answer on that, Christian, because I can do a 3-minute off of a 180-minute, but you have to be able to read the markets like I do to do that. And this, a lot of our focus at the advanced seminar is on the multiple time frames. There's only so much you can learn at one time. But I mean, think about this, guys. This is from 26.11 up to potentially 35.13. What has the euro been doing? It's been moving up. Does everybody understand that? That's the correlation between your time frames. Let me put this back on gold. Yeah. And that's just telling you that's probably where it's going to find an area of resistance, Nick, is at 35. When you learn how to read your multiple time frames like we do, you don't worry about how many trades to get in a week, because when you get the trades, they're really good trades. We'll put this on a 720. Okay, over on gold, you got the magenta peak. What you're waiting on is for this to come back and test the ATR, which it has not done yet. Yes, after a 1440, I use a weekly and then a monthly. And I mean, we're looking at this on futures, but you can put it on stocks. You can put it on commodities. We were trading corn and wheat the other week. You can put it on crude, whatever you want to put it on. You can trade options with it. Think about it. Isn't it really great in an option trade if you know where price is going? Oh, it's beautiful trades on wheat and corn. I mean, those two trades paid for the tools, literally. It is impatience. It's realizing that you're not the big boys. Okay. Now, I have a couple of big boys that use my system. Okay. I know what the big boys do because I talk to them. They're clients. But most of you in this room are not big boys. I hate to tell you, but you're not. I'm not even a big boy. Okay. Big boys are the ones that have the million, billion dollar accounts. Okay. They're the banks. They're the ones that are trading, anywhere from 20 contracts on the euro US dollar up to 200 contracts on the euro US dollar. You do have to let the market come to you. If I can't tell you what market direction I'm going to be going by the time I get to my 45-minute chart, there is absolutely no reason whatsoever for me to look at a 3-minute chart. That's just fact. Because the only thing you're going to be doing is guessing which way the market's going to go. Sometimes, Artemin, the magenta peak will come in on the 3-minute and other times it will not. So do you have to wait for a 3-minute magenta peak? No, you do not. I like to wait for the magenta peaks just because I like magenta peaks. Why? Because it tells me what the market is going to do. What can I expect? Well, the magenta peak tells me. Notice that you've had divergence on the 3-minute. You're at the ATR on the 12-minute. This is where I would be anticipating a pop to the upside on the 12-minute. I'll do that another day, Bob. I usually only do those on Monday, Bob. It's the top-down time frames because if you haven't been to a seminar, you don't understand what I'm doing. It was sweet, wasn't it? Well, that is what allows me to take a trade. The Aussie, no, it's still on you contract, Gwen, as far as I know. If there's any question in your mind about it, oh, what happened? Oh, it's not there. It's this one. If there's any doubt in your mind, you just put up a radar screen and compare the volume. Which one has more volume? The U or the Z? The U still has all the volume. What you're seeing, Gwen, is really a slowdown in volatility because of the expected market reports that are coming in on Wednesday and Thursday. I haven't traded all week because of it. It's not moving enough to even attract my interest. I mean, both of these are supposed to be substantial reports coming out, or announcements, I should say. So, I think that was on gold. This is where I'm expecting a magenta peak on the 3-minute. I'm expecting a bounce off of this ATR on the 12-minute. Let's see if it happens. If I get the magenta peak on the 3-minute, that tells me it should pull back to the ATR over here, which is at 1738.6. Now I want you to watch down here as the magenta peak starts to come in, if it comes in. It still has to retrace some more before it comes in. I wouldn't be looking to go long. With the magenta peak on the 45-minute, I'd be looking to go short. But you've got to get the magenta peak. You've got to retrace back to the ATR on the 3-minute. You see how the ADX is getting weak? It's relatively slow market movement right now. You can see the weakness because it's not going straight up. Yeah, I noticed that too, Stuart. Now you're getting a magenta dot. Is that a pointed top? Not yet. It's turning into a pointed top, but it is not there yet. What am I anticipating? Right now, I would be anticipating it to pull back to the ATR over here on the 3-minute chart. Right now, that ATR is 738.7. The only thing I don't like about this tag on the ATR on the 180, Stuart, is doing it on increase in volume. Do you see how this ATR is pulling down? You have to pull your line down as well. I don't even look at that when I'm looking at it, Stuart. Ideally, you would want that closer to that high there, Gwen. I have to look at what the high value is. 0.3. Well, you've only missed it by about 2 points. I don't look at that on the long-term chart, Stuart. It's not part of the criteria for that. Never has been. The problem with reading that right now, Gwen, that bar has not finished yet. It will not finish until noon today. I think this is going to be a deciding factor in it. Yeah, and I had notated that earlier today about the 1440. And it's almost telling me that gold's going to go down this week. But I think it's going to be after the announcements. So I'm waiting to see how that plays out. If we did not have those announcements, Gwen, I'd probably be going short. No, the market's not moving enough to entice me to get into it. It's really not. This is slower than what it was in August. Okay, there's no way I'm touching this market right now. The same thing I told Richard this week. Me and him were talking earlier, and remember yesterday I told y'all it's just not going to have that nice smooth movement. Oh, August was terrible. You can literally say the world is watching for these two announcements this week. And remember, the breaking news this morning is that the U.S. is going to get downgraded again by Moody's. So, and all of this is hitting at the same time they're supposed to come out with these two special announcements. It's absolutely correct, Pat. Everybody's kind of sitting on the fence right now. Now, the difference is, for example, I've got a client over in the UK, okay? And he used to be the uh, trade manager for Goldman Sachs on the Forex desk. He gets his trades for like 20 cents. 20 cents in, 20 cents out, okay? He can go into these little bitty movements and he can actually make a profit because he does it with a huge number of contracts. We're talking $10 million is the minimum that he enters on. But look at his trade cost. Is there anybody in this room that gets their trades for 40 cents in and out? Oh, yeah. Exactly, Bob. That's what I was thinking too. That's a good little strategy, actually. Big money on that one. Can you show us again how to move and add columns on the radar screen? Sure. Might as well do something because this ain't moving. Okay, you want to know how to move the columns around, Gwen? If you highlight up here on the where it says THD pullback, it highlights the entire column. Left click, and while you're holding your left mouse button down, drag it to the right. And if I'm not mistaken, that's actually in the video that I put up on the community as well. You're welcome. I don't trade a 12-minute magenta peak. If you traded a 12-minute magenta peak, you'd have to use a 1-minute chart, and you'll turn into a crack trader if you don't know what you're doing. It takes, yeah, more like crap. If you're doing a 45-minute magenta peak, you're doing it off of the 3-minute. If you're doing a 12-minute magenta peak, you have to go down to a 1-minute. And that 1 minute is noisy. You have to be really, really good to take that trade. And I don't see many traders that have that skill level because they get enticed by the 1 minute. Timing is everything on that trade. And you also have to be able to walk away sometimes. If, for example, and this is kind of easy when you get used to it. Let's say you had a magenta peak on the 720. Okay, I used my 45-minute. Okay, if I have a magenta peak on the 1440, then I do it on the 180. If I have, on the weekly, I would use the 720. And that's not the weekly, unfortunately. The THD free volume is the one that you should be using, Gwen. That's the one that I use. Just no really, there's no trades. What doesn't, Gwen? The THD free volume? Just change the colors. That's all. All you have to do, Gwen, is click on the THD free volume, do format. Under the neutral color, change it to white, and that will make it give you the volume numbers. It's because it's an inside bar, Gwen. Okay, I'm going to go ahead and close the room because there's no trades going off, and I'm not going to sit here and just watch the screen. Now, we will be back tomorrow morning again. So if anybody has questions, I'll be happy to answer them. I do hope everybody has a wonderful day. Hopefully the markets will actually be moving tomorrow because the announcement's supposed to come at 10. I believe that's European time, German actually. So everybody have a wonderful afternoon, and I will see you tomorrow.
The organizer has ended the session, and this call will be disconnected.